Welcome to another weekly S&P 500 analysis. Today is December 21st, 2024. As you can see on this S&P 500 daily chart, we saw on Wednesday after the Fed latest interest rate announcement, we got the market sold off and took a dive here. Now, that should not be a surprise to anyone because for the last few weeks, we've been talking about the possibility of this liquidation break. Because if we look at this divergence between the New York Stock Exchange AD line, which is forming a negative divergence with the S&P 500, and if we use the analogies of people pushing the car up the hill, as we get less and less number of people pushing the car up the hill higher and higher, then as soon as those people, those few that are left pushing the car are exhausted, then we will see the car roll back down the hill. And that's basically what happened as fewer and fewer start pushing the S&P 500 higher and higher. And as soon as those few start get exhausted, then we saw this liquidation break. And it just happened that we saw it when the Fed gave us the catalyst to trigger that sell-off. Now, the question is the Friday bounce back is signify the end of this pullback, or is this just a dead cat bounce? So in this video, we're going to take a look at the internal and the price action and see what the market is telling us. So stay tuned. Let's take a look at this VIX chart here. You see this on Wednesday. The VIX actually went up to a high of 28.32, but it never came up and got above this 30 level. Then on Thursday, it came back down, and on Friday, it actually closed below the 20 level and closed at 18.36. So all these fear that we saw the market participant have at on Wednesday seems to have dissipated on Friday. And if we take a look at this chart here, we see that also the put call ratio never got above 1. And on Wednesday, there were more put buying, but not dominated by the put buying. In other words, the put call ratio get above 1. And the high was it closed at 0.89 on Wednesday. And then look at on Friday. Friday, the market participant was starting buying calls again. The put call ratio was down at 0.678. And looking at the up-down volume ratio, on Wednesday, we saw over -9, 9 to 1 on the downside on the up-down volume ratio. That means 9 times more of down volume than up volume. And then on Friday, we saw almost close to 5 to 1 in favor of the up volume. But look at on the advanced decline, the daily advanced decline on Wednesday, the declining stock outnumber the advancing stock by a margin of 2,413 on Wednesday. Now, just imagine, in the New York Stock Exchange, there's about 3,000, a little bit over 3,000 stock traded in the NYSE on a daily basis. So let's say we just make a little bit round number calculation and use 3,000. So that means we have 600 stock that is split between up and down. So we add that 300 into this 2,400, that is 2,700 stock declining on Wednesday versus 300 stock advancing. That means on Wednesday, 90% of the stock were declining in price and only 10% actually advanced in price. And look at it on Friday. On Friday, we saw 1,400 advancing in price. So if we again taking that 3,000 number, that means there is 16 of them between the advancing decline and split that's 800. So we got 2,200 stock advancing in price on Friday. Okay, so that is basically somewhere around 70% of the stock traded in the New York Stock Exchange were actually advancing in price on Friday. But if we look at the new high, new low, we see that on Friday, the number of new low is still way outnumbered the number of stock making new high. Because on Friday, there were only 25 stock make new 52-week high versus 168 stock make new 52-week low. And even on Thursday, we got a little bit of a consolidation. On Thursday, we're still seeing a lot more stock making new low than new high. So although the cumulative AD line is going back up a little bit along with the S&P 500, but if we take a look at this, these low here, And connecting these guys here on this low on the AD line, we see that there is still this negative divergence between the S&P 500 and the cumulative AD line. And if we take a look at the NASDAQ market, look at the NASDAQ market up-down volume ratio on Wednesday. It was minus 4.57 in favor of the down volume. But the interesting thing to see is the daily advanced decline. The declining stock outnumbered the advancing stock by a margin of 3,051. Again, there's over 3,000 somewhat stock trading in the NASDAQ on a daily basis. And this is almost 100% of the stock went down in the NASDAQ on Wednesday. And on Friday, the advancing stock outnumbered the declining stock by 1,500. And we did see the up-down volume ratio turn positive and was a positive 3.5 to 1 in favor of the up volume. But once again, on the new 52-week high versus 52-week low in the NASDAQ market, you can see that the number of new low outnumbered the new high, while the NASDAQ been making all-time high. And even when it was coming down, we still see the number of stock making new 52-week low relatively elevated compared to the number of stock making new 52-week high. And here looking at the divergence between the NASDAQ 100 and the AD line, the cumulative AD line, you could see the persistence of this negative divergence, and it is getting wider and wider. So is this bounce from Friday is a end of this pullback? And, it is still above this 30-week moving average here. So I wouldn't be surprised that we'll continue to see a little bit more downside because we have not seen the internal make much of an improvement yet. Although, yes, on Friday we saw some improvement on the up-down volume ratio and also the advanced decline. But is that just due to a dead cat bounce, or is that a reversal of what we saw on Wednesday and Thursday? And if we look at the Dow Jones Industrial, we also see the Dow Jones Industrial sold off and got a nice bounce off on Friday. But it is below this 30-day moving average, although it is above the 30-week moving average. As you can see, it is turning down a little bit. So we probably could see a little bit more downside here before we see the Dow Jones Industrial start turning back up. And look at the New York Stock Exchange Composite. And you can see that actually it dipped below on Wednesday and Thursday, this 30-week moving average. And then on Friday, we kind of snuck back above it. But you also see this 30-day descending 30-day moving average. So I wouldn't be surprised that we could see a little bit more consolidation here while this moving average come down. I believe that we could see a little bit more downside on the New York Stock Exchange Composite. I want to remind you that this is not a beginning of a new bear market. And the reason why I'm saying this is because we still expect the S&P 500 to make another new all-time high before this particular cycle is completed. And again, if you have not been watching my video for the last few weeks, then you probably are not aware that the ES, the E meaning S&P 500 future, have informed us to be on the lookout for a possible all-time high from the S&P 500. And when I discuss the ES later on in this video, and I will show you where did it gave us that message. And look at these indexes, this chart of all the major indexes that we are following. The Dow Jones Industrial, the New York Stock Exchange Composite, the Dow Jones Transportation, the NASDAQ 100, the S&P 500, and the Russell 2000. Notice they are all below the 30-day moving average, except the NASDAQ 100 came back up a little bit on Friday, but on Wednesday and Thursday it's actually down below the 30-day moving average. But right now it seems to be back above it. So we'll see, would this continue, or this is just a little bit of a head fake. And if we take a look at the last week performance, we see that the Dow Jones Transportation was the weakest. It was down minus 4.9%, while the NASDAQ composite only down 1.78%. So if we go down the list here, the Russell 2000 was the second worst performer for the week. New York Stock Exchange Composite and the Dow Jones Industrial, then followed by the NASDAQ 100 and the SP 500, and finish off the bottom of the list is the NASDAQ Composite. So you might want to just pause on the video and look at this table to look at the month-to-date and also the year-to-date performance of these indexes. And looking at the 11th sector in the S&P 500, you see that the XLK, the technology sector, also sold off, but it got a nice bounce on Friday and came back up to a little bit of a declining 30-day moving average now. And the XLY, the consumer discretionary, is still above this 30-day moving average, although we did see the sell-off as well on Wednesday. And the communication actually went below the 30-day moving average, and you can see that's kind of flattened out and starting to decline, although on Friday it seems to try to reclaim that moving average here. And then here on the retailer, the retail also dipped below the 30-day moving average, and it's trying to come back and reclaim that. And we've been seeing the industrial been quite weak, and it continued to be weak, as well as the energy. And as a matter of fact, the energy sector was the worst performer for the week. And here the consumer stable. The consumer stable is also starting to come down, as well as the healthcare. We see the healthcare has continued to be weak, and it's not even close, bounce back up to this 30-day moving average. And you can see this 30-day moving average is declining here. And also the utility is coming down as well. And here's the real estate. The real estate is also getting quite weak. And the financial broke below the 30-day moving average. And also you see this 30-day is turning over now, and it is actually declining. So you can see that the S&P 500 is trying to come back up to a declining 30-day moving average. And here's a table of the 11th sector performance. So you might want to pause the video and look to the performance for the week, month-to-date, and year-to-date. And if we look at some of the key sector here, the semiconductor sector is also seems to be just kind of chopping around here. It's trying to find direction. And likewise for the oil been down for quite a while, but right now it seems to be in this range between 74 and 70. So we'll see which direction it decides to go. Or is it going to come down and take out the 70 and dip below and come down to possibly the 67 area? Now also the energy explorer and the processor has also been weak. You could see that it had made a new low on Thursday. So a closing low from this 52 week. And again, we're seeing the retailers weak, and also the biotech is being weak as well. And also the XME, the miner, is also been weak. And here we see the bank, starting to turn over here. It's dipped below this 30-day moving average. Likewise for the regional banks. And here is the home builder. You see the home builder continue to decline, even though we got a little bit of a bounce here a couple weeks ago, but it did not hold well up above this green area here. That's basically above the 30-day moving average. Right now it's dipped back below the 30-day moving average. And look at the TLT, the long-term bond. It's continued to go down even after the Fed's latest 25 basis point reduction in the interest rate. And here's a table of the performance for these sectors. So you might want to just pause the video and go to the number and see these performance. And last week we saw the miner was the worst performer, followed by the home builder. Just go ahead and pause this video to go to the number if you're interested in looking at the month-to-date and the year-to-date. Now let's take a look at the price action of the indexes. Let's go and take a look at the E-mini S&P 500 volume profile chart only right now and see what's happening here. You see this is Wednesday. You see this dump here, a lot of very light volume here. this basically just a liquidation break, and people just basically just want to sell at whatever cost. They basically just want to get out. And then on Thursday, we got a little bit of a consolidation day here, inside day, and on Friday, we got a nice bounce took out Wednesday low, and then we got a nice bounce up here and came back up. So right now it's sitting at this balance area on Friday. So we're going to keep an eye on it to see if it will continue to move up or come back down and try to find acceptance down here at this balance area. And here on the market profile chart, you can see a lot of single prints left behind on Wednesday, but it also resolved a lot of the previous single print as well. Now I'm going to clean up this chart here. I'm going to post it on my daily trade plan for Monday. So be sure to go and check out my Substack newsletter and read that post, and that way you will get some idea what are some of the levels to keep an eye on Monday. Because on this video, we're basically looking at a little bit of a broader perspective and see what we could expect for the coming week. Even on Friday, we have a lot of these single print, basically poor structures in the auction here. So we're going to need to see prices come down here and repair some of these single prints, or come back up and repair these single print left behind on Wednesday. Now here is the poor high here. This is a poor high, and this is also all-time high. So the market basically saying the auction has not completed to its fullest extent because we did not see excess. So the price will come up and take out this poor high. So in other words, we're going to make a higher high. And when it does, that will imply the S&P 500 most likely also be making a new all-time high. And that's the reason why we are still expecting the S&P 500 to come up and make a new all-time high after this correction has been completed. Looking at this ES daily chart here, basically the 24-hour chart. Remember last week we were talking about this price action possibly come up to the upper range here and take out the all-time high. And on the downside, basically you're looking for it to come down to the lower range. And we also said if there are some hawkish statements from the FOMC, then we're basically looking for the possibility of a move down into the December lower range here. And that's exactly what we saw. And we basically saw this came down to the December range and almost filled this gap here. So in the coming week, we'd be looking at the possibility of filling this gap. And if we take a look at the hourly chart, we see that it came down to this area here. And here's what we could expect for the coming week. As you can see, on the coming week, the market is pricing in somewhere around 60.85, 60.82 area for the upper range, and the lower range is somewhere between 5907.50 and 58.50. So we are looking at the possibility of a move, possibly it'll come back up into this high volume area that is trying to find balance, or it dip below and come down and test this high volume node here. And we might even see it come down to this LVN somewhere near the 5803 if selling continue to push it lower to get into this area here. You can see there has been resistance turn into support here. So we're going to be looking at this level here on the downside, this 5803, as one of the key levels to keep an eye on. And for the SPY, the ETF for the S&P 500, we did see the price came down to the lower edge of the monthly expected move, and then it bounces back up to the lower range of the weekly expected move here. And looking at the 60-minute chart, you can see that it came right down to the edge here on this monthly expected lower range and bounces right back up. So right now, we basically are looking for a continuation move on possibly come back and test this low here. So here's what the market is pricing in. For the coming week, the market is pricing in 600.30 and 599.70 for the upper range. And for the low range is between 582.60 and 577.50. So what we're going to see is will the price continue to push back up into this upper range and basically getting back up to this 30-35 moving average cloud here. And if it's unable to do that, then we basically are looking for the move to continue to come down on the downside and check this LVN at 577.92, and that would be at the lower edge of the lower range of the weekly expected move, and possibly even come down to this level here, this balance area somewhere around this 574.42, and basically fill this gap, completely fill this gap here. And looking at the QQQ, the ETF for the NASDAQ 100, here's a scenario from last week. We basically was looking for a price to move up to the upper range of the weekly expected move. And on the downside, we're looking for this thing to come down to this HVN, basically testing this moving average cloud here. And as you can see, it came up to this upper range on Monday. Then on Tuesday, it kind of did a little bit of an inside day consolidation. And then we got that flush on Wednesday. And we saw it came down, moved below to this 513.42 and dipped below it before we saw it bounce on Friday and came back in to this lower range of the weekly expected move on Friday. And for the coming week, the market is pricing in a upper range between 529.70 and 528.30, and the lower range between 509.10 and 504.50. Now, what we're going to be watching for is to see what the Friday's rally continue to move up and get up to this upper range here. Now, if it pull back and come back down, then we'll be looking at this lower range near this 504.50, basically get back into this low volume area and possibly come down to this high volume node near the 496.52. So we could see a downside possibly come down, dip below this 500 level. Now on the upside, then we're basically looking for this 530 area to see would it be able to get back up about this 530 area and possibly come up to the all-time high up here. So if we continue to see the technology sector to pull back, especially some of those mega cap tech stock, we could see the price pull back into this high volume node here. Now we just zoom out on the SP500 ETF, the SPY chart here. We could see that there is this trend line here, and the price is still above this trend line. We see, a couple of these support level here, and it is possible that the price will come down to this high volume area, which is in confluence with this trend line here, and that would be down here somewhere around 571. So if we believe the Friday's bounce is just a dead cat bounce, then we could see the downside possibly come down to this 571 and come down to this trend line here. So that might be a little bit away, maybe in the early part of 2025. But for this coming week, we'll be watching this area here, somewhere between 582 and 577 on the downside. So this is the key. If it take out Friday's low, then we definitely be looking for the possibility of coming down to this 571 in the near term. So until the internal are showing us improvement, we continue to be cautious because the market is extended. Now again, I just want to remind you, this is not a bear market or a beginning of a new bear market. Remember earlier I mentioned to you about the ES, the E-mini S&P 500, continue to hold that poor high. So until that poor high get resolved, we will not be looking for a substantial correction here. Now we might be a little bit more pullback before we get a bounce, but definitely I did not expect to see somewhere around this 15 to 20% correction on this pullback. So be cautious and have a happy holiday, and be sure to smash that thumbs up to help promote this video and give it a like. And if you are new to this channel, click the subscribe to help support this channel. And if you'd like to see additional content from me, go visit my newsletter at Substack. The link is in the description below. It is smtraderCA.substack.com. Thank you for watching and good luck on your trading.